All right, Mike, let's start off with the merge. The massive overhaul of Ethereum has finally happened. After several delays, we did have a very smooth transition. All went well on the technical side. How significant is the merge?
The key feature of Bitcoin is as follows, and in my opinion, it's just a matter of time before it reaches 100,000 essential features due to supply declining and becoming unchangeable. Demand and adoption are rising, and unless you expect that trend to reverse, which I don't, I believe that it will accelerate. From what I can tell, this trend will continue. It's only a matter of time. I believe that it has reached the stage where prices are becoming really low, and we should look back on it from a very low price in the future, similar to how we would view the Nasdaq from its lowest point, which is 22,002. Despite recent price drops in the marketplaces for cryptocurrencies by 2025, according to Senior Commodity Strategist Mike McGlone at Bloomberg Intelligence, Bitcoin is on track to reach yet another record high. McGlone, a futures and commodity trader with more than 30 years of expertise, believes that by 2025, the most popular cryptocurrency will reach the desired $100,000 range. The seasoned investor and crypto market player also forecasts that Ether will go significantly higher during the next 5 to 10 years in his discussion with Kicker's Michelle Makori. According to McGlone, some occurrences like the recently completed Ether Merge have increased selling pressure on cryptocurrency assets in 2022. The Federal Reserve's will to continue tightening in the bleak global macro situation, however, is unmatched. The Fed's sledgehammer will keep striking the markets, according to the analyst and market strategist, until asset prices fall sharply. Before the dust settles, he believes that the global equity market may easily lose another $20 trillion. The asset values for crypto equities and commodities are going to see some difficulty in the next months, as McGlone discusses in his interview. He does, however, think that there will be some short-term suffering for bigger long-term benefits in the Bitcoin market. Please watch, like, and share the interview with Mike McGlone as we continue. Additionally, be sure to share your thoughts and observations in the space below, and be sure to subscribe to the channel for more videos like this. Gratitude and good viewing. I believe the most important thing to understand is that despite the risk and the publicity, there has been a significant reversal back to $1,000. Just as I came from the futures pits, I believe that the theory is revolutionary when viewed in its entirety. Finance is a revolution. Like futures and ETFs, it is revolutionizing finance. However, as soon as this merge is complete, we must now be concerned about any hiccups in the road, which we all know may occur with this kind of technology and member. I'm a marketer and a techie, so I rely on other technology and other people to do my job. But given the current situation, we must focus on the macrocosmic large picture, which is the Fed's sledgehammer that has been exerting pressure on cryptos this year. And I believe I have that in mind. Because I'm worried about getting overly excited, I've kind of lightened up a bit with all this merge discussion and written about Ethereum. And we now have okay, let's get started. And in all markets, I'm concerned about the short-term suffering for long-term benefit. There is undoubtedly a lot of good news pricing in the near future, but all risk assets are currently experiencing a big macroeconomic bear market. Even bonds are down, the housing market is changing, etc. I'm about to turn 60 years old, and this macro may actually be one of the biggest bear markets in most of our lifetimes. And because I've never seen this before, I believe it to be early. Michelle, the Federal Reserve is acting so aggressively. Additionally, there is a market and a world economy that are seriously headed towards a recession. Given that we have a Bloomberg economics tracker, I would say that 2008 was a pretty decent indicator. The strength of the global economy has changed. You explore the cryptos based on that macro. And I believe that this year's events are coming to a head as the markets realize that Bitcoin is one of the most important real-time, 24/7 traded, leading indicators in the world. I mean, it's Friday, which means happy hour. Then you can really see it on Saturday, observe what's happening on Sunday, and it will herald one of the biggest risk-off markets you've ever seen. I predict that will happen more frequently. However, I believe it will prevail over Bitcoin in particular because I believe it will trade more similarly to our long bonds and gold, which had a problem today, which is a sign of the problem. And Ethereum is so revolutionary because one thing that's most notable, I like to point out that Ethereum is making the most significant thing happen that I see, is the tokenization of assets, most notably the most widely traded cryptocurrency on the planet, our tokens, our dollars theory made that happen. Sims was the leader, despite the fact that there were rivals. One of them is a Tether. There are a dozen stable coins that pretend to be crypto dollars. But more individuals are becoming aware of how groundbreaking this technology is. And they are all aware that the majority of people realize they must adopt in order to keep up. What does that mean for the price of Ether, which may return to $1,000 or perhaps drop a little bit? And I believe it will rise significantly over the following 510 years, but for now, the most important factor for all cryptos is there a space of roughly $1 trillion? The $100 trillion global equity market has already lost 20%. It will likely lose another 20%. The issue is that this Fed sledgehammer is a revolution, and I can't see what would stop that at the moment. And in the midst of a world economy that is heading into a downturn. So for me, that's how macro is, but if you look at this in 5 or 10 years, that's when I think cryptos are really going to make a difference. However, I see it as being more like the year 2000. The internet bubbles are also just starting to burst. In order to reduce inflation to 2%, the Fed plans to take back its $9 trillion balance sheet in addition to raising interest rates 4 times in a row, mostly consecutively. This is no small accomplishment given that the central bank has been using quantitative easing to support the economy for more than 10 years. In his interview, McGlone adds that the Fed won't pivot because it now recognizes the seriousness of the impact its bailout operations have on the economy. The analyst claims that more significant asset price decreases are the only way to eliminate inflation and that the Fed will not begin to ease policy anytime soon. And it's typical human nature given that we now have the advantage of knowing the extent of their blunders from overreading. The essential point is that it's obvious the pendulum for assets swung far too far to one side when looking in the rearview mirror and scanning the front of the vehicle as it travels. The Fed is clearly going to play a large role in the pendulum swinging dramatically the other way, but it's just not going to happen that they'll ease as they did after the 1987 crisis and just before we fell in 2018. And most importantly, in 2020, first quarter. Because they are now aware of their partial responsibility for this extreme inflation. The main topics I frequently revisit are these, and cryptocurrencies are a good leading indicator. When it becomes thus macro, you must refer to the macroeconomics fundamentals. According to Milton Friedman, inflation is first and foremost a financial phenomenon. Second is Adam Smith's law of the invisible hand. And it seems to me that the invisible hand, where you throw money at people and they buy too much and extend, is now strongly at work. The main characteristic of cryptocurrencies is that they were the most speculative leading signal I had ever seen. It's still innovative in how people can access currencies other than their own currencies, such as the Dow or Bitcoin, since this stuff trades 24/7 internationally and fluidly on your phone. But things are now moving in the direction of, okay, 2000 was a mistake. We did. After that, we began to decline, and it took 1,314 years for us to rise beyond the Ohio inequities. I see a similar situation here with the tightening monetary policy of 1929. That is very much how it is developing. Consider crude oil as an example. The 100-week moving average of crude oil is currently experiencing its greatest ever pumping. And now since it is going backward, I would usually say that the pendulum has swung too far. And I believe that we have just begun. I thus hope that they won't become overly affordable. The Fed won't be easing anytime soon, so the biggest thing, in my opinion, is if things settle down after a week. Unfortunately, the markets must decline in order to prevent the Fed from relaxing, otherwise, they will simply wait for inflation to decline. What is the most effective approach to reduce inflation? Markets must decline, surely? Cryptos make up a very minor portion of that. But this is the reason I believe the macro is too large. And I believe that it is somewhat my responsibility to warn people when I sense a storm approaching, and they just selling this as my genuine fans. What is going on? I'll ask you this, is this past people? What stops it, even our listeners? Will the Fed be involved? Will the dollar become stronger, or will it reverse? No. Will it have an impact on the global economy? No. Is China going to be released? It's quite improbable. I don't see anything stopping it right now besides risk assets declining, reaching a lower plateau, and then resetting. Despite the unsettling position of the markets, McGlone makes a favorable price prediction for Bitcoin. The Bloomberg analysts had previously forecast that by 2025, the top cryptocurrency by market size would trade at a price of $100,000 or more. He reiterates these points in his most recent interview, saying that while the supply of Bitcoin is fixed, demand for it and adoption of it are continuing to grow tremendously. This is having an incredible beneficial impact. Michelle is referring to the times when someone like myself would say, "Oh, there's nothing to analyze since the Feds are just pumping money into the economy." And that is everything. These days are past, and things are back to being pretty terrific. Establishing sound enterprises to eliminate zombie businesses. If you fail, bankruptcy may be a wonderful thing, but we cannot have it. I'm looking for that time frame, then. Once we have finished this brief phase of purging the excesses of excess, we're returning to the globe, but first we must acknowledge the US's utter dominance. Take a look at the US, which is the top net exporter of energy, and Lourdes, which is the top net exporter of agricultural. We're the biggest net importer. How did that happen? 10 years ago, we adopted technology. So much good has resulted from this. The Fed is aware that most people are beginning to understand. We simply need to get through the pain first. And I believe that's why whenever the stock market makes a decent recovery, selling will occur. After that, things will be reset, but keep in mind that the stock market will likely begin to decline and stay down on negative news and rise on positive news in the future. And I've been eagerly anticipating that day. And the Fed can make it happen at this turning point. Because they don't want to return to the horrible old days when everyone only looked to them to save them if everything went slightly wrong. They won't pivot to be too simple. What do you think of Mike McGlone's predictions for cryptocurrencies like Bitcoin and Ether as well as other assets? Please share your opinions and insights regarding the interview in the space provided below. If you haven't already, make sure to subscribe and give this video a thumbs up. Everything helps the YouTube algorithm, which enables us to keep delivering excellent videos to you. I appreciate you coming.